It's been a minute since we've had the pleasure of speaking with this young man. He is known as Coach Carson, small and mighty investor. I've been traveling, he's been traveling, but we are back at it together. How you been, brother?
Doing well. Good to get back to work.
Absolutely.
If you could call this work, like talking to each other, having fun with friends, and teaching people. I mean, that it doesn't feel like work to me.
No, it definitely doesn't feel like work. And I think I have an important topic today. Um, and that is it still possible to do what you and I did, the small and mighty investor, aka one rental at a time? Is it still possible today? I'll just leave it at that. What do you think?
I will acknowledge that I think it's harder than it was the last 5 years, I'm convinced that the last 5 years was an anomaly. That it was just a weird time, and there's hard things about it, there was good things about it, but there's a unique combination that I don't think is normal in most markets, where you had really low interest rates and you were able to put 20% down and get a property that cash flows in many markets. Not San Francisco, not New York, but a lot of markets around the country. You could put 20% down, get a 30-year fixed 3.5, 4.5% loan, make it cash flow. And you were buying it retail. You're just buying it off the
Yeah.
MLS. And I don't think that's normal. I've been investing 21 years, but I'm also a student of the history of real estate investing. And I think the normal is sort of what we're seeing here, where you have to bust your tail a little bit to
Yep.
find a good deal. It's not going to land on your lap. And what does that mean? That means that some people who are kind of like lukewarm about real estate investing, I think, are going to probably hop off the train. I just don't think it's going to be their thing. And I think that's okay. There's nothing wrong with that. But I think the people who are left are the ones who realize that real estate investing on the front end to get into this business is more like a business than
Mm.
a pure investment, that you actually have to treat it like a startup. You have to talk about marketing. You got to think about sales. You got to think about fundraising. And I think the people who get that, who think more like an entrepreneur, like a business startup, which has traditionally been what real estate investors are, we're like kind of the control freaks of the investing world. We want to have our hands a little bit dirty. We want to get into a deal. Then yeah, I think it works. I have students who are buying properties. I get success stories every single week. They're being a little bit more creative sometimes. Sometimes they're using different types of financing, but pretty much they're just having to work harder to find a deal. And so I don't have to be convinced. I know it's working. It's people are buying properties.
I think that's really wise to kind of talk about, because I think you're right. I think certainly since 2020, it's been an artificial market. What do I mean by that? Well, we had rates at zero, but we also had the Fed coming in, and they were the largest buyer of mortgages, which pushed rates artificially low for owner occs below 3%, investors below 4, and kept it there for years, 18 months or so. I will agree with you, and I think that's spot on. That was a very unique point of time. So if you were aggressive, to your point, you could buy out of the MLS in cash flow. However, I've been doing this since 2002, and I'm very excited about the next 6 months. I think the next 6 months could really prove to be the slowest real estate market of my 22 years of investing. Think about that. I think we're going to do the least number of transactions the next 6 months of any 6 month period of my investing. Why does that excite me? Well, most people don't like to work. Most people want the easy button. Most people don't want to follow up. Most people certainly don't want to follow up many times. Most people just want to write a straight up offer on the MLS. They don't want to get creative. They don't want to do multiple structures. And frankly, that's why I'm excited. I expect the lukewarm people to jump off. I expect the people that think it's impossible to continue to be soft and listen to doomers. And I'm going to keep doing the work. My community, your community will keep doing the work. And there's going to be so much less competition the next 6 months. I'm excited.
Yeah, I'm with you. Rub your hands together. Here we go. And I always have fun talking to you, Michael, because I think we have a very similar fundamental approach, but we also have my expertise is not your expertise. You were really good at looking at the market, at looking at trends. That's why I love listening to what you talk about. I kind of take a different approach. I always tell people the metaphors. I played linebacker as a football player in college, and a linebacker, I had never knew what the other team exactly was going to do. I just always had my head on a swivel. Like I was just prepared for anything. And that's sort of the approach I take as a real estate investor. Sure, I study the market. Sure, I try to, but I like to react to what's happening. And I just like to be prepared to react in all sorts of different ways. And I'll give you an example. 2008, 2009, I started in 2003 as a real estate investor. And I did a lot of things wrong going up to 2007, 8, and 9. But I was prepared in a way because I just followed some fundamentals. Like I just paid attention to things like having big cash reserves, being really conservative with my financing, having relationships and teams that make sense. So all the things you and I teach, and buying good deals, like focusing on deal finding and as well. And so I think if you focus on the fundamentals, then you'll be prepared for opportunities like today. And yet, you don't have to be predicting these things. You can just say, hey, here we go. There's longer days. There's longer days on the market. I've been making offers for years, and now I'm buying 5 properties instead of 1. That's the way. So I'm saying that to people because I think this is a lot. So it can be frustrating sometimes with the way the market goes up and the market goes down and it goes sideways. But I think the thing I like to encourage people to do is focus on the things you can control and pay attention to. And if you're like me, you like learning about what's going on, but you just want to focus on these fundamentals. And that's encouraging to me because those don't really change. Like the things that are the same, it's like playing basketball. But you know what? Kobe Bryant, the way he dribbled and shot was a little bit different, but back in the day when Kareem Abdul-Jabbar was playing, it was, pretty similar. Yeah, there's a 3-point line that's a little bit different, but basketball is basketball. Football is football. Sports are a great metaphor because, the best players, the champions, they just focus on the fundamentals and they do the work and they practice and they prepare. So I guess this is a long-winded way of saying that I think it's a great time for small, mighty investors, for one rental at a time investors, because the fundamentals are still there. Like there are more financing options for real estate investors today than when I first started as a real estate investor in 2003.
Amen to that.
DSCR loans, hard money loans, private money loans, conventional loans, subject to loans. There's all sorts of stuff out there. So the tools are there. It's just a matter of like doing the work, adapting to the current market. And I'm like you, I'm very excited about it.
So I'm going to go out on a limb. You were a linebacker. I never pretended to be a linebacker, but I'm going to share a story that I think I heard Ray Lewis say one time. And it really is about your react, which I think is pretty cool. I heard Ray Lewis one time say in a speech that he was a good, if not great, linebacker when he was 5 yards off the line. But Ray Lewis became Ray Lewis when he went 4 yards off the line because it forced him to react that much quicker, that much more sudden and with conviction. He wasn't always right, but when he was, the impact was Hall of Fame. That's what it was. So I think kind of taking that analogy, you're just getting closer to what I call a buy box, your area. If you get closer to it and you're looking at it every day, like I'm sure Ray Lewis looked at game tape every day, you will start to see little things that most people miss, and you're going to take a shot. And, sometimes they'll fake you and you'll go to the wrong hole. But a lot of times you're just going to pop that running back before he picks up speed, and you're just going to shut him down. So what I do, is that a good linebacker analogy?
It's a great analogy. Yeah. There's an art of risk taking in sports that I think is very analogous to entrepreneurship. And this is one of the coaching points I've had a little trouble with, Michael, with some of my students, is that there's a certain mindset of just like wanting to eliminate all risk from the equation. And I get that. Like I get, you don't want to lose money, but what the Ray Lewis metaphor, what football and sports metaphors tell me is like, you've got to continually take a lot of little risk. And so stepping up from 5 yards to 4 yards was a risk, but there's always a reward on the other side of that risk. And so what you and I do with real estate every single day is figure out where there's just a lot of upside on the other side of some risk or some hassle or some work or something else. There's a cost and then there's a benefit. Like that's capitalism 101, is that you're just looking for the ratio to be in your favor. But like another baseball sports metaphor, even if you're an all-star baseball player, you still don't hit 100% of the time. Like you gotta be okay with losing some deals, losing some money. You got to be okay with looking stupid here and there. And I find a lot of people have that as an obstacle, as a mental obstacle, is they want to be so good, so perfect that they're not willing to get blocked here and there, to take a chance, to mess up and look stupid. And I admire what you're doing. You're going out there with your Vegas series and you're like, I'm just going to show it all. I'm gonna be transparent. And that's really awesome, because it's going to show people you're not afraid to make some mistakes. I'm sure there'll be some mistakes along the way.
Oh yeah.
And that's the most educational part of it, is to see that, hey, here's how Michael reacted to that thing that didn't go well. And that's so good to see.
Yeah. One of the things that I've been thinking about, because I, like you, I have a lot of folks that show interest, appear on the surface at least to be doing what I call the work, but they have yet to make an offer. So if you follow me at all, you know, for multiple years, I've been handing out gold cards, like golden tickets for your first deal.
Mm-hmm.
I've been handing out black cards for your next deal. You can get as many of those as you want, but you can only ever get one golden ticket. This is something I just created. It's a purple card. And I've created this. So far, I've only sent out one, because I created this because I know there are people stuck in analysis paralysis, and I'm telling them to write disrespectful offers, you know, days on market, below the median, all that stuff that I'm sure we talk about and teach. But some people still need that encouragement, because again, you write that first disrespectful offer. Let's just use some numbers. Let's say it's listed at 210, 40 days on market, no showings recently. It cash flow, it becomes a great deal at 172. I'm just making it up. But a lot of people won't write it at 172 because they just talk themselves out of it. So what I'm trying to do is say, write the offer at 172. Even if they tell you to F off, you have won.
Yes.
Right. What I'm trying to get people to realize is, write the disrespectful offer. You won't die. And when you do, I'll send you one of these as a reward. So just created this. So far, sent one. I hope to send out hundreds of these, because I know lots of people are stuck.
Yeah.
Write the offer, get the reward.
That's brilliant. Yeah. There's the result and there's the lead measure. Like the thing that gets the result is what Michael's sharing with you here. Like I always tell people, like when I'm coaching people and they're saying, I can't find any good deals, I always ask them, well, how many offers have you made in the last month? If they've told me, if they say one or they say zero, I'm like, no. Like we're not there yet. You need to go get 20 of Michael's purple cards and then talk to me and tell me that it's not working, because you can't steer a parked car. Like you got to get emotion. You got to make offers. That's where things happen. So I as a teacher, that's to me is the most important thing, is like, do the process and just trust it. Just trust the process. Like it's going to work.
You're not going to die. It's only an offer.
Yeah. If worst case scenario, people tell you to F off, and you learn something.
Worst.
Right. Yeah. You learn something, but for every F off you get 3 or 4 real estate agents who say, yeah, they're probably not going to accept that, but thank you for making the offer.
Yeah.
Let's stay in touch. Let's see what happens. Hey, I got this other property over here that might work. Let's do that. I mean, so many good things happen. But when you're sitting on your hands, and this is what we're talking about, of taking a risk, if you just sit in your hands and you're afraid of what might happen, and you've gone in your head and you've thought about all the reasons somebody's not going to do that. And in fact, this is often the people who are more experienced, by the way, like the smarter people I know, the doctors and the attorneys. My brother's an attorney, so I can pick on attorneys. Like the higher level of your qualifications, the more likely it is you're going to overthink these things. Like give me the little, the 20-year-old right out, just still in college who doesn't know any better. They'll make the 20 offers.
Yeah.
Almost all day long, but it's the person who has just knows too much. They're too experienced. Even experienced real estate investors are like, oh, that didn't work for me. That'll never work. Yeah. Well, just do it. Just do it and think about it later.
Yeah. The last thing I want people to realize about what I think is coming, and why I think small and mighty investors and one rental at a time does still work, and I think the next 6 months is going to prove it in spades, is I think the next 6 months, it will be easier to find a motivated seller than any time in the last decade.
Wow.
Think about that.
Yeah.
Right? Some people have to sell. Some people want to sell. In a seller's market, you cannot tell the difference. In a buyer's market, you can. Yeah. That's what I look forward to.
Yeah, investing gets fun when you talk to people who are a little bit more motivated to sell their property. It just changes the game for sure.
Yeah. So, yeah. The last thing I think we should talk about here, and it is your specialty, something that is your secret sauce, is I think a lot of what's going to come is leans on creative financing,
Mm,
whether it's just straight up boring seller financing or if it's some kind of other wraps or lease options. It's going to be, folks, how do you skill up? Because there'll be some people that have to sell. They're motivated. They're really motivated, but they
yeah.
have no equity. Then there'll be some people in the same position that have 50% equity. And then there'll be some people that own it free and clear. The offers that you can write are very different, 1 through 3 in that example, correct?
Absolutely. Yeah. If the unlock, the puzzle piece to think about is you've got the property and you got the money. And
Mm-hmm.
they're two separate things. So you and I talk about buy boxes until until our face is red, right? That is the starting point. That's the most important thing. So find a property that meets your buy box. Find a property that the price is looking a little more likely to be in a good price range. And then let's figure out the financing. Like the financing is what's not working for a lot of people over the last couple of years because of higher interest rates. But if you think outside the box, if you say, I like this property, I like the price we're looking at, now how can I figure out the financing so that I can have a positive cash flow? Like just pause on that question. How can I do financing so that the cash flow works on this property that I like? Then you start getting, that's where the creative financing comes in. And there's tons and tons of possibilities, but you got to be willing to like be creative and step outside the box and ask that question. And so it might be that, hey, this seller has a lot of equity in this property, and you talk to them and they're like, they don't really need the cash for some other property. They just don't want to manage it anymore. And because you built rapport with them and because they trust you and because you offer to pay a little bit more than you would on a cash price, maybe they're willing to accept the down payment from you and monthly payments for the next 10 years. Very
Exactly.
possible. And because they're willing to do that, the payment you pay them is low enough that it cash flows even in Fresno, California, or even in Washington, D.C. So that's an unlock, seller financing, but it's a mindset too. I found there's the technical side of it. There's some skills and there's some paperwork, but if you have a good real estate attorney who understands who understands creative strategies, which is not most of them, by the way, you got to find those people, but there are a ton of these strategies that work. But the unlock is you being willing to ask those questions of the seller, to ask
Yeah.
those questions of private lenders, of private partners. Like, so it's not just sellers. There's a lot of lazy money on the sidelines. So if you can find somebody who's willing, here's the common theme. You got to find somebody willing to take a lower interest rate or a lower amount of cash flow today on their capital in exchange for something else. And so the seller is willing to take a lower cash flow on their equity because you're solving their problem with this house that they don't want to manage anymore. So that's an exchange. But this other person over here who has $5 million in the bank and they're just like, they just want to put some money in real estate, they might be willing to accept a 2% cash flow or percent return on their cash flow right now in exchange for half the equity or half the profit or part of the
Exactly.
growth, right? So that's where the creativity comes in, is that you gotta, you know what you have with this property, and then there's all these tools like seller financing, lease options, private money partners, private money lenders, and it's just the toolbox. And it is absolutely the key. It's the, it's kind of 201 level real estate investing. It's not as easy as going to the bank and getting a conventional loan, but I've never had a problem ever of getting money to buy the deals. If it's a good deal, I got the
Yeah.
money because of that toolbox that you have.
Yeah. No, I think that's just wonderful advice. And again, I want to tie this together with what I think is coming. The slower market gives you time. Now you can't just, it's not unlimited time, but
No.
if you rewind 3 years, you had to make a decision in 5 seconds.
Yeah.
You now very likely have 5 days, especially if you're looking at older, longer days on market. You're having conversations. The other thing I want people to kind of feel as we wrap this up in the small and mighty investor and one rental at a time world is, from my experience, the money in a slow market is made in the following. I do not recall ever getting a great deal in a slow market with my first offer. In fact, I would argue I do not want the seller to take my first disrespectful offer. It is meant to stir the pot. It is meant
Yep.
to check motivation. It's meant to start a conversation.
Yep.
And you're gonna have to, it's gonna take work. It's gonna take effort. This is not just one call closes. What do you think of that?
Oh yeah, agree 100%. I remember in the prime, I'm really buying a lot of properties. I had a spreadsheet, kind of they called it the sales a tickler file. Basically, I had hundreds of properties where I've either talked to the seller, made an offer that I was following up on every week, every week, every week. So yes, I agree. I had one seller I followed up with for 5 or 6 years before I finally bought their triplex from their spouse after that person passed away. Like it's just, you got it's like a bulldog mentality, but it's also, it's just a patient mentality. It's like, hey, if it doesn't work right now, maybe it'll work later. And if you, I'm glad we're talking about that, because some people might not realize that's this timing of a seller situation is really what matters. And so when they say no today, it's because they think they're going to get a better offer, or because they're not that motivated. But if even even us, like if there's a time when we're selling a property where a certain day where we have another opportunity over here that would make us a lot of money, that we would probably take a discount or do something different, more creative. So you can't assume. This is another one of those things I've found. Very experienced investors, people who are really smart about other things, they sometimes overthink this. They're like, no, I wouldn't do that. I wouldn't sell a property like that. Therefore, that's just not an offer I would make. That's crazy. That's crazy thinking, because you are not them. You are not that person, and you are not that person in that time, in that situation. So it really is, it's funny. It takes a kind of a simplifying of your thought process a little bit to make some of these things work, and just being organized and just doing it, following up, and not overthinking the whole thing.
I love that. I love that. So at the end of the day, small and mighty investors, one rental at a time. I think our time is coming. I think the next 6 months will show returns for the effort. Chad, if somebody wanted to follow you or go get the book, Small and Mighty Investor, where should we send them?
Yeah, the book is on Amazon. It's on Bigger Pockets, and actually just got a couple of awards recently. So I was super proud, super excited about that. Independent Book Awards. So it's, to me, that the book is just a guide. If you want a blueprint for how small and mighty investors approach achieving financial freedom, that's what it is. I also put out a podcast, a new video every Monday on my YouTube channel. Not as prolific as Mike is, but I get it out there, and I have a lot of content about analyzing deals, about running the numbers, case studies of people. So love for you to check me out, make a comment, let me know you're there.
Awesome. Thank you so much. Take care.
Thanks, Mike.